What's going on, guys? Welcome back to another video. Thanks for tuning in. Today we're going to be going over why the market is bleeding off and how to handle red days such as this. And as you can see on my screen, my 50k portfolio, I am no exception. I am down about $1,000 today. But I'm not really too worried. It's just short term. In the long run, stocks generally increase, but every now and then we do have pretty big red days such as today. So what can you do? If you have short-term options, it could be a good exit, but if you're holding shares, you shouldn't worry because eventually these stocks, as long as it's solid companies, they will recover. So why is the market down today? There's pretty good reason why the market's down today. It's been down past week. As you can see, I'm down around 2k overall the past week. That's due to higher interest rates, and when there's higher interest rates, it indicates that new money is being pumped in, and it just generally indicates that inflation is increasing, and this is scaring off investors. They're pulling out cash from the market just to have cash on their hands. But for long-term investors such as myself, people in their low 20s, they generally do not care because there's so much time on their hands. We got like 40 years to invest, and our money will grow over time. But for people who are closer to retirement, they see this as an opportunity to cut losses and take cash. So let's see. There's some pretty good buys on the market today. A lot of stocks are on sale right now. I don't really have too much. I have a bunch of cash secured puts, some leaps, which is long-term options, and then a Tesla YOLO. So I do have some stocks, APXT, which is going to be merging with AvePoint, a company that Microsoft is partnered with. ICLN, it's clean energy. Lemonade, I think it's at a good price point right now. Metro Mile, it's pay-as-you-go car insurance, which could save people a lot of money in the long run. But let's take a look at my watch list and see what stocks are on sale and what I think is a good buy. Obviously, ARK ETFs are always a good pickup. They have been outperforming SPY, general market. Cathie Wood is pretty good portfolio manager, and your money is pretty well off in her ETFs. I would probably stay away from the meme stocks, GME, AMC, BEB. Lemonade, I think that it could be a good buy. It's dropped over 50% in the past month or so. Desktop Metals, DM, I think it's a good buy too. They do 3D printing. Palantir, I think Palantir is a good pickup, and I might buy more shares of Palantir just because ARK ETF continuously buys shares of Palantir. Last night, actually, ARK ETF bought over 2 million shares of Palantir on the dip. So Palantir is a great long-term hold. Of course, we don't know what's going to happen in the short term, but over the long run, I think it's a good company. I also am eyeballing rocket companies. And this one's a pretty interesting one. Over the past week, we saw retail investors buying into this company only because the short interest was high, and they wanted to short squeeze this stock just to screw over the hedge funds. But then we saw a sell-off, the hype died down, and now we're sitting at a price point of $26. And remember, guys, if you buy the stock before March 9th, you will qualify for the special dividend of $1.11 per share. So I do think right now is a pretty good, fair price point. And if you buy into this before March 9th, you do need to hold the stock for about a month, and that is when you will receive your dividend. And that is basically a 4% return in a month, assuming the price of the stock stays relatively the same. Let's take a look at my list again, see what else is a good buy. AMD, definitely a good buy. Nvidia, Apple. Let's see, maybe Disney. Airlines are pretty down right now. and Cloudflare, that is always a good pickup. So a lot of stocks are down right now. Please take this opportunity to buy the dip, average out your cost basis on your portfolio, and in the future, like if you don't have cash on the sidelines, you should probably hold some cash, because for red days like this, it's always a good opportunity in the market on red days. And if you do want to hedge your portfolios, you can do that by buying puts on SPY. You could also buy the VXX, which is like the inverse of SPY. If you buy VXX shares, you will be hedging your portfolio in red days. As you can see, VXX is up today. You could also put your money into bond ETFs, and I have some bond ETFs in my Vanguard portfolio, but you could put your money into here, and it generally is relative. It's very safe. The price of this bond ETF hardly moves, and the good news is you get a monthly paying dividend ETF. Granted that the yield is pretty low, but you do get those monthly payouts, and compound interest does work in your favor. But this is a pretty safe one. You're not really going to be making a lot on capital appreciation, but it is a good way to hedge your portfolio and have a safe investment. That's about it for this video. If this video helped you in any way, please consider subscribing if you haven't already.